The workbook, if you're not familiar with Excel, when you open up a workbook, that's kind of what we would call the entire file. Within the workbook, you can think of it like a binder. There's individual sheets in this binder, and you can see these tabs at the bottom here. In this version, there's 5 different sheets, so we're looking at the 1,000 log summary here at the bottom. We'll talk about each of these, but if you keep clicking down, you can see some of these other examples here of different sheets. So we basically have a mix of things that are filled in to kind of show you some examples, and then some blank ones so you can actually try it out yourself. So I'm going to do my best to zoom in and out and show you the best image of each of these as we go. These budgets were developed originally with the University of Vermont and Cornell in partnership, and then we used a lot of the data from the farmer research trial we did back in 2010 to 2012 to kind of fill in the data. Now those are all the figures are going to be averages, and averages are going to be the midpoint between those that spent the most money and the least amount of money, and those that were most efficient with their labor and those that were least efficient. So you're going to fall somewhere in that continuum. This will give you a starting point, but I want to encourage you to start keeping records and thinking about the types of things you want to track so that you can actually see how you're doing. The more information you have, the more you're going to be able to really improve your system as you go. And every time I update our budget for our farm every year, it's amazing what I learn and the types of precision I can implement in terms of what changes can come to the system to make it actually more profitable. So we'll go through each of these sheets, and then of course if there's any questions or clarification, or maybe you find an error, I'm pretty sure these are quite robust, but you might find something, or you might change something because you find it helpful. All those things we encourage you sharing in the forum, and definitely get in touch if you have questions and if you need me to help you walk through or complete a budget. So the first tab in this, the first sheet in this workbook, just is the simple enterprise budget. There's 2 pieces to this. One is a budget, which looks at your annual production and revenue and expenses, and then there's a cash flow, which takes those numbers and kind of spreads them out over the different months of the year. So we're going to kind of break those things down. All right, so this first sheet is basically just the overall budget showing in 1 year at 1,000 logs, so starting off sort of at peak production, if that was 1,000 logs, what that would look like. And the reason we chose 1,000 logs was based on this information, based on this data, based on the average price around $12 a pound. This is what would get you into a production scale that should gross over $10,000 in a season. All right. The reason we're targeting that, again, I've said before, is because that's when you could claim ag exemption on the property that you're using for production, both the laying yard as well as any forested land that you're using to manage that. So that's just one target. You might have different targets. You might want to shoot for $5,000. You might want to shoot for $50,000. That's up to you. But that's where we're starting with this, and it's a nice round number that we can sort of play with. So at that rate, generally speaking, every year you're going to need to inoculate somewhere between 300 and 400 new logs to basically replace the ones that you are losing to retirement. All right, so you can assume that out of that 1,000 logs, you have about a third of them being 1-year-old logs, a third of them being 2-year-old logs, a third of them being 3-year-old logs. And so, if we divide 1,000 by 3, we're talking about 333. So again, between 300 and 400 logs should account for that and keep you at that scale of production. So you have a total number of logs there in the first column here, of course. Now, what's nice about this formula, and we'll look at it when we do an example, is once it has these figures, it'll add these up for you and it'll start to compute. So some of these things you don't have to figure out, the spreadsheet does the math. So based on the number of logs in production, it's showing me on this that I'm going to be soaking 143 logs a week if I'm doing a 7-week rotation. If I'm doing a longer rotation or a shorter rotation, I could simply go up to the formula, which is up in this bar here, and I could change it to, let's say, 8 weeks. That means I'm going to let each log rest for 8 weeks, and that would tell me that I'm going to soak 125 logs a week. So you can certainly play with those formulas if you want to. It can get confusing though, so be careful if you do that. Maybe save it as a separate document in case something gets weird. And that shows you your low end and high end, your production per week, assuming all those logs produce, the average that we found over our research was 1/4 to 1/2 pound per log per flush. Of course, some of those logs are going to be produce more than that, and some will produce less. So it gives you kind of a sense that at this rate, you might be talking anywhere between, 35 and 70 pounds a week. Then you can choose in here how many weeks you're going to soak. In this example, we're talking about 18 weeks. If we think about a season that starts on June 1st and goes through October 1st, that's June, July, August, September. That's 4 months. That's 16 weeks. So we might stretch it a little bit further than that. You might think about a 20-week cycle if you're going to try to really stretch it. I would say 16 to 18 weeks is a reasonable estimate. And then so you'll get a sense of your total pounds for the season, low and high. And then the average, that we're talking about. So that gives you some projections. What I've found over time by collecting information is that we tend to average about 1/3 of a pound per log per flush over time. That's been pretty consistent. That's right smack in the middle of our low and our high for the production. So those numbers are then transferred. You can make some decisions. This is showing kind of a split of those pounds, that kind of average pounds. So out of that 964 pounds in this column, we said, okay, I'm going to make 464 of that as a fresh product, 400 pounds of that as fresh retail, 464, fresh wholesale, 400, and then dried about 100 pounds. You could also, if you're going to do value-added production of any sort, pate or soup or something like that, you could put a certain pound to those different things. For starters, all this stuff kind of averages out to about $12 a pound. You could just put all the poundage in fresh retail or in one column and just kind of see, but this is useful in the long term, so you can kind of divide things up and have a look. Another thing that folks often get into is selling inoculated logs, so you could put some of those down in the column as well. So once you make all those decisions, it'll spit out the cash receipts for these different products and what you might be looking for as in terms of gross from these different things. So that's really worthwhile playing around. It can really make you start to think, well, if I'm selling my X amount, wholesale versus retail, try some different price ranges and kind of see where you land. It's really useful to do that. And then we have down here some expenses. Now these again are based off the data we collected. The mushroom spawn is based off of 75 cents per new log, so that's a formula there. Anytime there's a formula associated with this, you can see that little green tab at the top corner. So that's making a calculation. You're not going to have to input anything. So those first two are based off the number of new logs you're inoculating every year, 400. You're going to make these decisions about what kind of equipment, variability you have. These were based on what we found on average in the research, so that gives you kind of a sense. And then the labor is based off of, as you can see here, again, the data that we had on average of how long per log it took to do these different tasks. So we're taking that, and depending on if we're talking about logs we're inoculating or logs that are in production, we're multiplying that factor by the number above. So all these things in the labor are going to be affected by the numbers you ultimately choose at the top for the total number of logs in production and also the logs you're going to newly inoculate every year. So to give you a sense of the total labor hours as well as the cost for that labor if you were valuing it at $12 an hour. Yeah. All right, and then you can also put your fixed or overhead expenses if you want to devote anything to that, and then you'll eventually get your income and expenses. All right, so on this left scenario, basically I just, these two columns are almost exactly identical. The big difference is if we get to the bottom here, we have a profit or loss of, $1,600 on the left and $3,460 on the right. And the big difference there is just these two numbers in red. So what our research found was it took about 0.41 hours per log in inoculation. That's this column here. And the reality with that is, that was for a bunch of beginners and certainly folks that were still trying to figure out their system. It really shouldn't take you over half an hour per log to inoculate it. That's a pretty slow rate. So we think over time you can probably at least double that efficiency. So that's what the number's reflecting there, is it actually only takes you half the time. And then down in marketing and sales, while initially you might be spending a lot more time doing the marketing and sales, over time you shouldn't need to do as much because you have your markets established. So that really shows that, while this left column shows maximum production 1,000 logs, that's going to take you 4 or 5 years to get there likely. And so, by that time you've probably increased your efficiency for inoculation. You've probably also increased your efficiency for marketing and sales. So that gives you some sense of there's some flexibility in here, but it does look good from these numbers. Your numbers are going to vary again, but we have some good faith. This is really what we based this project off of. So that's the first example. The second sheet is really just taking that same thing. Let me just move it over here so you can see it in the recording. Taking that whole example and then just really breaking it down more realistically by year, because you're going to scale up over time. You can see the example here is doing 400 logs every season. If we started in 2017 with that, we'd be ratcheting it up. We'd just have 400 logs in the first year with 0 in production. The next year we'd have 400 in production, but we'd have 800 logs total in the yard. The third year we'd have 800 in production and 1,200 in the yard. The fourth year we'd finally get to our 1,000. Because we'd start to cycle some of those logs out inevitably after the fourth year, right? So that kind of gets us to our stable number. So then you can really look at what does this look like in the beginning and as I scale up. And of course, again, you can change these things and think about how you want to go over time. You might say, I'm going to go for 1,000 logs, but I'm going to do it over 6 years or 8 years. And you can always just add columns onto this if you want to. So this gives a better sense of the reality of how the scaling up goes. And it's also useful to see that, okay, in my first year, I'm obviously not going to have anything to sell. My second year, though, we're talking about, I'm going to be selling potentially, between 14 and 29 pounds a week. Then it's going to go up to between 30 and, 50, and then it's going to go up, even more than that. So, so that's kind of the reality of how that can go. So same things here, you could split these things out, you look at these, and then it shows you kind of your income, as we're working our way up over time. Of course, expenses are going to vary. Sometimes you might spend the same amount on fuel, every year, but something like Angle Grinder, you're probably not going to, after that initial investment, need to spend the same amount every year, so that kind of changes. So you can play with all these things. Again, the labor will kind of sort itself out unless you want to change those values. And you get your information at the end that shows that the first year you have a bit of a loss, but you can essentially start making a profit in the third year if you count all your labor, and in the second year if you don't. So we do include all the labor in here, but very few folks, when they start, really sort of pay themselves to get this going, but it's possible, and I think it's a good thing to think about it. We don't want to encourage folks to start up enterprises and not actually pay yourself at the end of the day. You can see here, we're talking about paying yourself or someone you might hire, $5,000 or $6,000 a year off this enterprise at the end of the day. So not a full-time job, but certainly part of a whole farm system, potentially. So there's a blank budget for you. It's based in the 4-season kind of setup here. So I encourage you to play with this one, the third sheet in the workbook. So again, I could start out and just kind of play with it and say, all right, well, this year I got 100 done. Next year I'm going to shoot for 200. Then I'm going to shoot for 350. And then I'm going to shoot for doing 300 new logs or something like that. You can then say, well, 100 logs will be in production, and then this year you should have 300 logs in production, and this year you should have 650, right? So we're just doing the math. We're adding the previous year's inoculated logs that are ready to go with anything that's in existence, and that's getting us up to 650 logs. It gives you a sense of how many pounds per week you're talking. Again, you can start to play with these different numbers. Out of all those pounds, how many do I actually want to, sell to different outlets and that sort of thing. So again, with this chart, you can see it says it up here. Well, actually, it's a bit off your screen here. Sorry. It says change the numbers in white, but leave the items in green alone. So it really helps you see the things you can change and the things that you should leave be. All right. So you can see all the cash receipts, some of the materials, and all the labor is going to be fixed. So you don't need to play with any of those unless you want to start to mess with the formulas. Okay. So the cash flow is the second part of this. The cash flow is really saying that while in this scenario, let's see, I haven't quite filled out my chart yet. I should probably do that. So let's see, let's go back up here. I'm just going to make it simple. I'm going to put the average pounds here in this category, just in the top, so 289, just so we have some actual numbers to work with here. Okay, that should spit out some actual revenue. Okay, you can see at this scale what we could be expecting in terms of, we're not talking about then making a profit for quite some time at this smaller scale. That's kind of the reality of this. So that'll give you some things then to plug in. But the reality is this just gives you the end of the year. What we really want to also think about is how your income and expenses are going to change throughout the seasons. Okay, so there's an example of what's called a cash flow. A little bit of it's going to be cut off in this recording. I don't think I can change that. I can zoom out just a tad. Let's see how that works. Yeah. All right. Hold on a second. So this cash flow is a little bit, it can seem really overwhelming, but really it's actually the exact mimic of all the things that you have on the previous sheet. So we can look at the income column here, all right, the expenses and the labor, all right, and then our overhead. So what we want to do is reference our original budget in this. This one again is based off of 1,000 logs in production, and so you can see what we want to do is start to think and refer back to our budget and say, okay, so if I have fresh retail sales, I have X amount of dollars, how's that going to be distributed? So the example on here shows, $5,000 in fresh sales, okay? Likely that's going to be all in June, July, August, September, October, right? Those are the main months of production for fresh. Same with the fresh retail, of course. And then when we start to look at dried, we could say, well, this is going to be evenly distributed throughout the year, or maybe there's a bit more happening in the winter, or maybe all of it's happening in the winter, okay? So you can start to think about taking that total number, whatever's in your budget, and dividing it up into different months as a rough estimate, okay? Same with your expenses, all right? So in this example, all the mushroom spawn expense is in February, when it's a good time to make an order if you're planning on doing spring inoculation, or maybe you do it in January and you pay for it in February. So, a lot of these expenses, the wax, the angle grinder, all these things are coming up in the early part of the season, and there's really nothing the rest of the year, right? Because you have to pay for that up front. Some of these things might be like the chainsaw. You might, take it in the fall, make sure it's ready to go for the winter for cutting, so that might be an expense at a different time of year. So again, you're going to take the total expense from your original budget, and you're going to divide it up based on the time of year that you think that expense is going to occur. And most often it's lumped one place or another, okay? Same thing with labor. This is, instead of putting the dollar value, you're going to look at the number of hours that is suggested on the sheet, and then you're going to divide that into different parts of the year, okay? So, so if I look at the budget summary, for instance, there's actually, over on the column, you can't quite see it. It'll show you the number of hours. Let's see if I can go over there. Here, the number of hours that we're talking about, the various split up of time, okay, for our inoculation. And you can figure that out and then plug those in. So in the cash flow, what you want to do is plug in your hours. So if you have 48 hours total, again, you're not changing anything in the green, you're just changing the yellow. You're going to say, well, I'm going to do my log selection harvest all in January and February, and it'll be about 24 hours in each month, okay? And then my inoculation, I'm probably going to try to do that in a little bit in February, but mostly in March and April, okay, and work my way there. So again, you're just going to sort of divide up those hours into different months, and you can play with that to really think about when you might want to schedule these different things. The lane yard maintenance, I'm really not doing much early on, and then I might start to think about putting some hours in, and I'm going to be certainly putting about an hour. We figure about an hour a day often throughout that growing season. Okay, so just divide those things up, fill in the white, don't worry about the green. Okay, and that'll give you some sense of your spread of time. And then the same thing with your overhead. Often your overhead you could divide up pretty evenly throughout the different months. So like insurance, it ends up being $25 a month basically for liability. We don't, in this example, have any loan payments. Rent, we might just give ourselves a measly rent here or something bigger, but you could divide that up by month. And utilities, if it applies. But utilities often are pretty negligible for this. We're not actually using a sustained amount of power. But the whole point of doing this is actually to look at what's going to occur throughout the season. So you need to fill out each row, with these things in mind. But what's really interesting is what's at the bottom here. And what this is showing is, you're looking basically at the distribution of income over the 12 months, and then you're looking at the distribution of expenses and what that difference is, right? So this is very much in line with a lot of different farming practices where you're actually running a deficit for much of the beginning of the year because you have a lot of labor, you have a lot of material expenses, you're kind of upfronting all those things, but your sales haven't kicked in yet. And you can see here in this scenario, until June hits and you're really making those fresh mushroom sales, you're in the hole. You got to figure out a way to finance that. You got to hopefully hold some of this money from the previous year, or maybe you're taking a loan, or maybe you got to figure something out in order to do this. Part of this is it still includes the labor costs. So when those deficits happen, you could say, well, I'm not going to pay myself till the end of the year. I'm going to bank that or something. So you can see, we do pretty good throughout the season, and then again towards the end of the year, we're starting to hit a bit of a deficit. In November, a little bit of a profit in December, that sort of thing. Okay, so what this tells you is once we look at the cash flow, we see where the negative cash flow is, and we try to start to figure out if there's ways that we can change that. So one example in this scenario might be to look at our fresh versus dried. So right now, we're selling $10,000 worth of fresh mushrooms total, and only $850 of dried. Well, the nice thing about dried is you can preserve that stuff during the summer and sell it in the off season. So one way to balance out these cash deficits is maybe to hold on to some product and actually sell it during those winter months. Another strategy I just mentioned was thinking about, deferring the payment of yourself until later in the season. Another option might be selling inoculated logs, in the holiday season as a holiday gift, something like that to generate income. So cash flow really looks at these kind of patterns, and it's a really helpful thing. Your business may be profitable, but it doesn't mean it's not going to stress you out if suddenly, for half the year, you're needing to spend a lot of money that you're not making. And we find this is really useful to do for each enterprise, and it's nice to then think about cash flow individually for an enterprise, but also for the farm as a whole. And we've balanced our cash flow as the farm through a few different things. One is maple syrup. So again, often with our mushrooms, we have a deficit in the early months, but maple syrup sales, because that's when it's being produced and sold, can often help lessen that quite a bit. We do pastured sheep, and our sheep are mostly sold in November and December. And that gives us a healthy amount of cash that we can then roll over and start to pay for the mushroom supplies. So sometimes in December, I'll place that order, or I'll get some supplies, pay down some of that profit from the sheep, and the cash flow then kind of helps balance it out. And then when the sheep need something, like at the end of the season when we start buying hay, like this time of year, maybe the mushroom sales are helping to balance that out, right? So depending on your farm enterprise, that might work. If you're just doing mushrooms, you're going to need to look more internally, or you might start to think of it in terms of your whole economy. You might say, okay, now I know that, in the spring, in January, February, I'm going to need to, potentially use some of my personal money to pay for these things up front, and then I'm going to account for that by paying myself back later in the year when I start selling the mushrooms. So, we have for you a blank form. You don't necessarily need to use the examples, but I would just start with the blank forms. I would start first with your budget. Okay, fill these numbers in, play with them. And then once you get those totals, start to divide them up into your cash flow. And start to think about how that's going to look over the course of the year. All right. Some folks like to do a high scenario and a low scenario and say, well, this is the least amount of logs I'm going to do, this is the most amount. What's ultimately important is that you know that the scale that you're aiming for is worth your time, it's worth your energy, it's meeting your goals for production, and it's not going to stress you out because it's going to cost way more than you thought in January, and it's not going to profit anything till October.